Based on your request, I have compiled a due diligence report for Datavault AI Inc., DVLT. However, a complete analysis is not possible as the available financial data is limited and key details on governance, ESG, and specific customer contracts are not publicly disclosed. The following report is based on the most current and reliable sources found, including company press releases and financial data platforms. Company overview. Business model and positioning. Datavault AI is a technology company focusing on AI-driven data monetization and acoustic sciences. Its business model is based on licensing its patented technologies and providing a cloud-based platform. The company operates two main divisions. Data Science Division aims to monetize data through platforms like Datavault Bank R, Datascore R, and Data Value R. It is developing exchanges for tokenizing real-world assets, RWA, such as commodities and carbon credits. Acoustic Science Division holds patented technologies, YSAR, ADOR, Sumerian R, for spatial and multi-channel wireless HD sound transmission, generating revenue through licensing. Management and insider confidence. Nathaniel Bradley is the CEO. A significant indicator of confidence is a recent transaction where an entity affiliated with him converted a $3.2 million promissory note into 10 million shares of company stock. Competitive landscape. The company is part of the competitive electronic equipment and software infrastructure industry. Identified competitors include NextNav, NN, Shoals Technologies, SHLS, and Indie Semiconductor, INDI. A comparison with NextNav shows Datavault AI has a lower net margin and higher institutional ownership, but a significantly higher analyst price target upside, over 329%. Financial health and valuation. The company's financials present a picture of an early-stage company with minimal revenue but high growth expectations. Key metrics from the trailing 12 months, and TTM, are summarized below. Metric value, and TTM, valuation. Metric value. Revenue, $444 million. Market cap, $464 million. Net income, $68 and $61 million. PE ratio, TTM, 0.32. Profit margin, 1,309.82%. 0.0% price. Sales, TTM, 1091. Operating cash flow, 2131 million. Price, book, MRQ, 554. Total debt, 3899 million. MRQ, enterprise value. Revenue, 100.91. Current ratio, 0.47. MRQ, beta, 5Y. Monthly, 0.20. Financial outlook. Management has provided ambitious revenue guidance, projecting $30–60 million for 2025 and over $200 million for 2026. For context, the company reported revenue of $2.7 million in 2024 and $1.7 million in Q2 2025. Growth potential and risk factors. Growth drivers. Large addressable markets. The company targets large markets, citing a generative AI market projected to add trillions annually and a global education market worth $177 billion. Pipeline of contracts. Dozens of contracts are reportedly in negotiation worldwide for RWA tokenization, which could potentially generate tens of millions in the short term and billions long term. Strategic partnerships. Key partnerships include a $150 million strategic investment agreement with Silex Holding Company and collaborations with Korea Aerospace University and Burke Products for defense applications. Substantial risk factors. Financial health and liquidity. The company is not currently profitable and is burning through cash. A current ratio of 0.47 indicates potential short-term liquidity challenges. Execution risk. The company's valuation is based almost entirely on future growth expectations. Failure to achieve its lofty revenue guidance would likely have a severe negative impact on the stock price. Speculative nature. The combination of minimal current revenue, high cash burn, and ambitious future projections makes this a highly speculative investment. The low beta of 0.20 also suggests the stock does not always move with the broader market, which can indicate higher volatility or lower liquidity. Forward-looking statements. The company's press releases consistently contain extensive forward-looking statements, disclaimers, cautioning that actual results may differ materially from projections. Market sentiment and ownership. Analyst targets. One source cited a consensus analyst price target of $7.00. suggesting a potential upside of over 329% from a previous level. Another source lists a one-year target estimate of $3.00. This discrepancy should be verified with more current data. Institutional and insider ownership. Institutional ownership, 2.07%. This is very low, which is common for small-cap stocks, but can also indicate limited confidence from professional money managers. Insider ownership, 18.30%, which can align management's interests with shareholders. Trading activity. The stock has a very high average trading volume, AV, 67 million shares, indicating significant retail interest and liquidity. Areas requiring further verification. The following areas are critical for a full due diligence but lack sufficient data in the search results I obtained. Corporate governance, no information on board independence, executive compensation, or shareholder rights. ESG, sustainability, no data on environmental impact, social issues, or governance scores. Supply chain and customer base, no details on major suppliers, logistics, or a breakdown of major clients and revenue concentration. Employees and labor, no data on employee turnover rates or specialized workforce dependencies. International exposure, no information on currency risks or country-specific revenue breakdown. M&A activity and tax practices, no history of acquisitions or details on effective tax rate and accounting policies. Bottom line and next steps. Datavault AI is a high-risk, high-potential reward investment. The company is in its early stages, with a compelling vision in growing markets like AI and tokenization, but it currently lacks the financial results to support its valuation. To make an informed decision, you should monitor official filings, closely track the company's quarterly, 10Q, and annual, 10K reports on the SEC website to verify if it is meeting its revenue targets and improving its profitability. Verify contracts. Look for official announcements confirming that the dozens of contracts in negotiation have been successfully signed and are generating revenue. Assess financial sustainability. Watch for news on additional financing, as the company may need to raise more capital to fund its operations and growth ambitions. I hope this structured report helps you in your analysis. If you have more specific questions about the metrics presented here, feel free to ask.